Hi, good morning. I want to share with you some thoughts for today. Okay. The next lesson about base return entry will be done next week. Okay. I make a video earlier on, but then here then I realized that my mic has no voice. So for 45 minutes, I realized that my audio can't be heard, my voice can't be heard. Oh my god, I have to do it all over again. Don't worry, I will still do it. Alright. Okay, so see, I even uploaded. Okay, let's just go back to the topic. First of all, right, I want to share with you in this video, right, why I don't use trend lines, and then the look left theory. Okay, why certain time you have to look at context into look left. Okay, look left, because if you look left all the time, right, that means if you look left all the way, that means you are only looking at one side of the market. I will explain to you later the gist behind it all, and indicators, why I don't use indicators, and then how supply and demand trading changed my whole philosophy of trading, and causes and effect theory, and how does the causes and effect theory applies in trading. Okay, all this is throughout my journey. Okay, as I learn about price action and supply and demand, and how I evolve and grow. Okay, because remember guys, when you learn about the thing is right, when you learn, right, do not stop learning. Okay, once you stop learning, the next thing is you stop growing. Okay, so never stop learning. Always look to be humble, always look to perfect yourself. Okay, so I'm going to go down and share with you guys about trend lines first, about why I don't use trend lines in my theory. Okay, first of all, on trend lines, okay, why I don't like to use trend lines. Normally when I look at the market, people will look at one side of the market, right? The thing is, right, when you do trend line, right, okay, in this case market is on a downtrend. So because this is really how I do it when I just new in this industry. Okay, trend line, okay, downtrend, okay, downtrend, so I do a trend line. So trend line is for all the points to be joined together, right? Okay, and if you look from here, based on if you just look at trend line without looking at momentum, without looking at price action, the next thing that you will probably do in this case, you are going to look for a sell and waiting and anticipating that price is going to break here because price is in downtrend. Okay, so in this case, let's see what happens. Okay, so your downtrend does not work. In this case, price has gone up, and then from here you're getting lost about how the hell I'm going to do a trend line, right? The thing is, trend lines are good for trending markets. When market's moving sideways, you can't do a trend line. So context, okay, it's all about context. Trend line is trend line is actually about market structure. Okay, trend line is market structure. Lower high, lower high, lower high. That's trend line. Okay, but you're going to adopt trend line to your strategy, and then in this case, you're quite lost. How are you going to mark your trend line? Trend line only works in trending markets. When the market is not trending, your trend line strategy won't be of much effect, I would say. Okay, then you see this. Oh, okay, good. Let's do a trend line around. You always find connection, but you does not even know what is the market doing. Okay, market is going up. Let's look for a buy. Oh, I missed my buy. Oh, market have gone up. we should buy, right? Market retest the bottom trend line, you take a buy, happy for a while. After that, price goes up and down, up and down, up and down. So how are you going to do it? Oh, market have gone down again. So that means now it's not an uptrend, that means a downtrend. Okay, then you wait for price to come back, you get lucky here. Okay, it's a downtrend. You sell here after retest of this trend line. Yes, it's good, and you get lucky here. But then here you try to sell again. And after that, what happens? Something's not right. Right? Oh no. Price have now gone into uptrend. So when you look at this, right, when you see price have gone, you're waiting for this buy, but price never came back. See, this is where now price is going up. Is it respecting trend line? Yes, it does, but I would not want to adopt trend line in terms of strategy, because first of all, when you use trend line, what you do is just connecting the things together. You did not really see what is the price action. You did not really see where is the momentum. You did not really see about buyers and sellers. You did not really see about supply and demand. Because for me, right, who is pushing this market up? It's only buyers or sellers, right? It's only buyers and sellers. So understanding the relation between buyers and sellers is much more important than connecting the points of trend line. Okay, yes, some people trend lines might work for you. This video is not meant to criticize trend line. Okay, it's not meant to criticize trend line. It's just to share with you that I do not really use trend line trading in most of my analysis, as you all may know. Okay, I like to do a lot of simple analogies, simple basic understanding about the market, simple understanding about buyers and sellers, simple understanding about momentum, simple understanding about who's pushing the price up. If I know price is pushing price up, I want to buy. Price pushing if I believe that price is going to go down, I sell. That's it. Whether it goes up until here or goes down until here, I don't give a shit. As long as it fits my trading plan and it fits my risk reward, and that's it. I go back happy. That's all. Okay. So because the thing is that when you do trend line, right, there will be a lot of conflicting theories. That's why I do not like to use trend line. Some people like to do strategy of a trend line break. Is there anything wrong? Nothing wrong. There's nothing wrong with that. It all depends on your approach. Okay, like for instance, before this thing happened, let me see. I'm going to just put. Okay, before this thing happened, most probably, right, most people will actually do this instead of taking this, or some people may even do this, right? So at the end of the day, right, there's a lot of conflicting theories, too many, then it's very messy. So I do not like all this kind of messy chart. Okay, my students will know me. I don't like messy charts. Okay, so do not make your chart messy. So trend lines is a no-go for me, and I don't like to use trend lines in my trading because it does not really tells me about who's going to control the price and how. Okay, So that's why I don't use trend line. Second thing is why I do not use indicators and look left. So I'm just going to go into indicators. Okay, if you go there's a lot of indicators that people adopt. Okay, there's a 8, there's a 21, there's a 50, there's a 100, there's a lot, 200. But the thing is, right, the more high you go, the more unrealistic it's going to be. If I'm going to put the 8, which is signified by this color, and the 21, most people will tell you, if price goes above this certain moving average, you buy. If price goes below moving average, you sell, and all that kind of shit. But the thing is, what does that tell you about price action? Are you letting your indicators decide? Is that are the indicators more smarter than you, or are you smarter than them? That's why indicators are lagging. Okay, price already moved, then it moved. That is indicators. Okay, so in this case, that's why I do not use indicators, and besides, it's messy. Okay, I don't like messy charts, as I say. Okay, even if I use from here, right, so we can see right now price is above the 8, price is above the 21, you look for a buy, and you look for a buy when price moving to the high. So how is it gonna help you? You see that? It's conflicting. Cause these are the kind of mistakes that I do. Alright, price above, look for buy. Then I go to the 4 hour, I never inspect anything, I just look for buy, I buy here, price go down, take out my stop loss and go up. Then I said, what the hell am I using this for? That is why I do not use moving average as well. Okay, you can use it as one time C and then you close. Okay, like for instance, right, if we see based on the 50 and the 21, okay, based on the 50 and the 21, there is a crossover of the 21 and the 50 in this case. This is the 50, this is the 21. Okay, the 21 has crossed over the 50, telling me that the near term is towards the upside, and any downtrend any counter trend move will be met with a strong move up. Okay, that is what it is. So that's why I don't use trend lines. So we're going to back here. I'm going to close trend line. Alright, see, like in this case, more cleaner, more nice. And look left. Okay, this is the best. Look left theory, right? For instance, like if you look at here, look left theory. If you look left theory, right, it only works for a while. Say for instance, let's say okay, there is a resistance here. It's a resistance here. So look left, if price come back, we go for a sell, right? In this case, you're lucky. You get it? Right? Look left. Price goes down. And then you hold for price to go down. Then you forever look left, look left, look left, look left. Okay, so you see now the downtrend has become an uptrend. And look at this one single zone here that I mark. One single zone, that is enough for you to understand where the direction of the market is. Okay, so it's more easier in this case. So you look, if you still mark this zone, you still get stopped out because why must you care about this when the thing that is happening is this? It doesn't make freaking sense. Alright, so try to change that concept. As I say, whatever my theory is here is not to criticize any strategy, because it all depends on the user. It depends on how you make the best of it. You may have the best trend line strategy that I don't even know of, maybe, but that's yours to keep. But I'm just going to share with you guys about my reasons why I don't use. That's all. It's not meant to criticize anyone or anything. Okay, it's never meant to, because I'm also try to get better in everything that I do. Okay, my learning never stops. Learning about the market never stops. Okay, getting better about things never stops. Okay, once you stop learning, you stop growing. Okay, so look left. Done. Indicators done. Okay, causes and effect theory. Okay, causes and effect theory. Causes and effect theory, right? If you Google, right? Okay, causes and effect theory, right, is the relationship between two things. Like example, if you eat too much fast food without any physical activity, leads to weight gain. So example, right? So the example as I do here, if you are this is no disrespect to anyone, it's just an example, right? Example, a certain person is fat. Like for me, maybe I'm not so fat. Okay, so that is the effect. What is the cause of fat? Eat junk food, no exercise, sleep a lot. That's a lot. Okay, so how does this how does this relates to trading? Is when I see trading, like my market. Okay, I'm gonna shut this off. Okay, when you see the market, right? Let me just see where's this. Okay, market move up, market move down, market move up. Okay, it's an uptrend structure, but there is a cause and effect. What is the cause and effect we're talking about here? This move up, okay, is the effect. Okay, this move up is the effects. What moved this price to go up is because of this cause. What is this cause? This cause is the buyers pushing the price up. Okay, because the buyers pushing the price up and the sellers fail to push the price down, becoming a higher low, and then it's a base, and that's why, because of this cause, price have an effect and go up. So in this case, if you look at an uptrend and you decide to go and for a buy, assuming you go for a buy, the effect has already taken place. But yeah, you go for a buy, that's where price goes down. For actually a retest, why do price goes down? Because the effect has already taken place, another cost has happened here. The sellers push the prices down. Sellers will push at higher price, buyers will push at lower price. So this is the cause, this is the effect. So once this effect has happened, same story again. Cause pushes prices up. This is the effect. And then price goes down here. This is the cause. Then price go up here. This is the cause. Price go down here. This is still the cause. Okay? Then in this case, it's a sideways. So you must know about causes and effect. Let me show you an example. Okay, like for in this case for Euro Aussie, right? If you look at this, this is the effect. What is the effect? Where does this effect of pushing up comes from here? There's a bank pushing the price up. Financial institution, big boys pushing the price up after a move down. Okay, buyers are in control. Drop base rally in the 4 hour. And oh no, sorry. Okay. Sellers momentum weak. See, sellers are weak, and then buyers push the price up. That is the effect. This is the cause. Sellers weak, buyers strong. Buyers push the price up. Okay, this is the effect. What is the cause? Retest of demand zone, drop base rally on a drop base rally. Okay, so that is a cause and effect. So for every cause there is an effect. The thing is, once the effect has already happened, right, you must see what is the price action telling you. So for instance, right, maybe another way for you to look at this, like if you see, let me just put that replay. Okay, like for assuming, right, let's see right now, there is a cost here. Okay, what is going to happen here, we do not know. Okay, but we know that there's a cost here. What is the cost? Sellers are pushing the price down in subbar, buyers are weak. The effect is here. So price, so the things right now, right, should price go up, it can still go down maybe. Okay, so now because of that cost, price goes down. And now look at that, this is the effect that's already happened. Now there is there's some cost here. After a drop, right, price make an engulfing, and I say after a drop, price make an engulfing. The next probable thing is that it may still go up. It may go up because after a drop, okay, it go up, and then this is the cost. Price making a base. Price making a base. The cost is always the base. Okay, the cost is always the base. And this is where the next chapter where I will share with you about weight-based return entry. Okay, that means you look for good buying or selling opportunities at the base. This is how you look left. Okay, it's based on this, not based on other areas. Okay, so this can see that because of this base, the effect, price push up. Okay, there's a cost here, that's why price goes down. Now there's a cost here, base, price push up. This push up, break this resistance, price resting on the base, force break of demand, and then that is where the effect happens, right? So the cost is a force break at demand, pin bar, in sub, not really in sub bar. It's actually, I get this Euro Aussie based on the engulfing on the 1 hour. I believe I get it on the 1 hour. Yeah, I think it should be 1 hour. I get it here. Okay, how I get it, because I say why I like this type of bullish engulfing. A drop, a bullish engulfing. Okay, so how are you gonna enter this on a bullish engulfing? Okay, as I say, the conditions for the engulfing, bearish or bullish, right? If in this case it's a good bullish engulfing, because previously before this drop, right, price was pushing up. So this could still be a rally based rally. So this is the entry trigger for me to go long. So for you can enter a buy. Okay, if you enter a buy after the close, right, as long as your stop loss is below here, give your trades room to breathe. Don't put it right on the dot there. Okay, don't be so petty. Just manage your position sizing. Okay, and you still get it. Or you can put at 50% of the engulfing. The thing about engulfing is that price can go down and take 50% and go up, or price can even go down to here before it goes up. So there is still a lot of conflicting shit if you want to go and enter this. But usually most of the time, if this is a good engulfing, right, price should not, most of the time it's not going to take out the low. But that's what stop loss is for. Okay, stop loss is when your trade idea does not make any sense. Okay, after engulfing, price push down, that is where your trade idea does not make any sense, and that's it. But after that, if price goes up, okay, it goes up, but you have to have an idea about how to enter and why and all that, right? But this is how I entered. Okay, because I see this as a rally, and then this engulfing is a base, and then the next thing is a rally. So in this case, it's a rally base rally in the 4 hour. Rally base rally. Okay, that's how I get my Euro Aussie buy. and because I know that people is going to sell. Okay, if you are going to look for a sell because of this candle, then that's the opposite I will say. Are you doing candlestick trading or are you doing trend trading? So it's another school of thoughts. Alright, so the reason why I like supply and demand trading is that, for instance, right, supply and demand, right, is that it's a theory between buyers and sellers. And then because I used to look for sell in this kind of push, and never think about buy, never really think about buy. But in supply and demand, right, we know that in supply and demand, let me give you an example in this case. If I'm going to give an example of the market, right, okay, in this case, right, remember, supply is always found after a push. Okay, after a push, a supply will always come. Like in this case, this is a supply. A demand is always happen after a drop. The lower is the demand, the more stronger is the price likely to react. Like in this case, price goes down to here, people see it as a downtrend, right? People see it as a downtrend. If you want to see it as a downtrend, okay, price need to pull back and break this and then come back here, then then you look for a sell. Not here, wait for it to pull back. But occasion is but the more lower price go, and your sell, right, is going to be very weak, because it's just a matter of time before price do this. Okay, because demand is always found below, supply is always found on top. That is the ruling of supply and demand, and that's why I like supply and demand. Okay, so for instance, in this case, the one that is building up is demand, not supply, right? Meet demand, go up, meet demand, go up, meet demand, go up. Counter trend is not helping. Price meet demand, it goes up. If price want to continue, if you see this as a downtrend, price need to go up here and price need to go down here, but it does not. And then in the end, it goes up here and say that the price is in a downtrend, but it does not. It make a false break, and that's actually the buy signal. The buy signal for this up structure, and this up structure happens after a big drop. So can this still go down? Of course, why not? But based on the information right now, we can see that the price is on an up structure, buy is in control, demand is still pushing prices higher, even on the higher time frames. Okay, on the higher time frames, right, how I see this, right, in the higher time frames, right, I see this as a drop, and then I see this as a base, and then after this base, here it is the base. After this base, price rally. What does that price rally do? That price rally is an inside bar breakout of this previous resistance 1, 2, 3, 4. A lot of time we retested. Okay, so price retested the mother bar, and now looking to go up. Will it go to the sky? I don't know. Because there are still a lot of supply here, but but most of the time when I see this kind of patterns or supply and demand, right, example, after price go up and then price goes down, price goes up, price goes down, that means now in this case, right, supply is cleared. When supply is cleared, right, demand, right, is taking over, it will just push up towards quite high. Okay, like assuming this case here, price go down, go up, go down, go up, go down, new low, supply clear, go up, go down, supply clear, go up, go down, supply clear. Eventually, once supply clear, demand take over. Look at where it goes. It finish off everything. That's what I like about supply and demand. Okay, so that is okay. So now about another thing. Let's go to about gold. going to show you my analysis for gold and see how it goes. What happens here? We start. Okay, so let's see, can I get my charts? Get gold. Now, what is gold doing? Okay, daily time frame. Are we in a downtrend? Okay, first of all, you need to define your downtrend. Okay, if price want to push down, what does it need to do? Okay, we got a down move. Okay, we got down move. We got up here, and this is where people are selling. I said yes, price is going to make a low. But hey, it does not happen. Instead, price goes up. And at this point, people are looking to sell, right? Because of this resistance. First of all, does this look like a supply to you? No, your supply is here. Okay. So, are we looking for a sell or looking for a buy? Okay. First of all, before this is another thing that you all can adopt in your trading. When you make your trade calls. Okay. If I want to buy this, what I want to see. Okay. If I want to buy this, what I want to see. One, buyers must be strong. That means the momentum is strong. Big body candles. Big body candle. Big body candles. Oh man. Alright, sorry about that. Buyers must be strong. I must see big candles. Okay. Number 2. Sellers must be weak. Weak, that means small candles by the buyer, by the sellers, that tell me they are weak, and it's time for me to enter. I want to see evidence buyers pushing or uptrend in smaller time frames. Okay, there must be evidence in the small time frame or my anti time frame to tell me that this pair want to go up. Then I would buy. Okay, so again, number 4, price must rotate rotate just a bit change, retrace. Price must retrace to value areas. Okay, so these are the confluence. There's a lot of reasons that you can put off. Okay, an example for instance, right? If you identify an uptrend, okay, if you identify an uptrend, this is not an area that you want to sell, you want to buy, sorry, because this is the effect already happened. Okay, but this is a good area where you can sell, where you can buy, okay, of a previous high or low, should the entry trigger comes. Okay, and if price reject, okay, in this case nothing, right? But once that is happened, next thing is breakout confirm, whether you see in the 4 hour or the smaller time frames, price retest, this is where you take your buy. Okay, you have strength on your side, you have momentum on your side, you got buyers pushing the prices up. That is where you take a buy. This is your value areas for you to take a buy. Stop loss below here. Okay, so now let's see it go. First of all, is bias strong? Not in terms of momentum, it doesn't look strong. Okay, but are the sellers strong? No, sellers are not strong as well, except for a rejection. Okay, but so in this case, the buyer strong, not evidently strong in terms of the candle, but it's still pushing the price up. Are the sellers weak? Yeah. I will put a tick on that. Are the buyers strong? Nope. Are the sellers are weak? Yes. Evident buyers pushing up and on the smaller time frames. Okay. Let's see in the 4 hour. What do we see? In the 4 hour, right? Buyers pushing the price up. Okay. But it has trouble over here. Okay, it has trouble over here. But if you look from the 4 hour, right? Price retrace to value areas, actually it's a good yes. Price have retraced to that value areas actually. In this case, price has retraced back to the demand. Okay, price has retraced back to the demand. In the 4 hour, what are we looking? Price is still uptrend. Demand is not broken. Okay, so if you are looking to sell based on this, it doesn't make sense. Okay, your 4 hour is still pushing down. Are we downtrending in the 1 hour? Nope. If price want to make a downtrend, what are you looking for? We are looking this as a signal for you to go down. The thing that must happen first, price go up. Price need to go down here and break this demand zone first. Then we anticipate this pullback for us to look for a sell. Okay, but now before you think about this possibility, okay, look at the general trend now. How to see that? Simple. Trending move. Okay, the trending move is still upside, it's not downside. If this is a trending move, if you see this as a trending move, why do market push very hard here? So this is a counter trend. Trending move, counter trend, trending move, counter trend, trending move. And what is this? This is still counter trend until it become a trending move, and this is a counter trend, but you're just looking at 1 hour. Okay, so for me, as I say, there's a lot of conflicting things that I see, because Friday is not really good time for us to look for any kind of buys or any kind of entries. You have to be very fast. Alright, so evidence, price must be price already retraced to value area, but on the daily, on the 4 hour, price is on the good value area, but on the daily, a bit skeptical, I would say. Okay, but it still looks good to me. Still looks good to me, because what I see from here, right? Remember, for gold, this is the effect. Which one is the cost? This base is the cost. Drop is drop. Sellers strong. Buyers weak. Sellers push down. The effect already happened. Why must you look for a sell? So now there's a new cost here. What is the cost? In sub-bar false break. What is the cost here? In sub-bar false break. If price want to go down, you need to go up and break this, but price does not break it. Instead, it became an in sub-bar breakout. And what does that breakout do? It breaks this resistance, right? And the buyers are pushing the market up. Buyers push, buyer push, buyer push, buyer push, buyer push. So can this single candle push the market down? Think about it. Is price in a supply? No, supply is on top. The effect of went down already happened. Why must we look for a sell here? Sell must happen when price goes up. But now price already went down, so price is back in the demand. And you look from here, there is still a demand of a rally base rally. Okay, then this is a drop base rally. Now to me, price can still make a rally base rally. Okay, but based on this evidence right here, right, I'm not really sure, to tell you the truth. Because why? In the 4 hour, right, there is equal buyers and sellers. I would say that the buyers and sellers are equal in this case, but slightly leaning towards the sellers. Okay, because of this candle here, and then price make an inside bar. Okay, but in terms of value areas, price is still there, so I will still wait for a few more information. In terms of value areas, it's a very good place to buy, seriously. Okay, but if you look at the 1 hour, right, the buyers is not telling me that they are strong. Look at the candle, so I'm not going to buy. Will I sell? No, it's an up structure, so I won't take anything yet as of now. So always make your judgment call from there. In terms of the, remember, you will all see what is the up structure. What is the structure that you see now in the 4 hour? It's an up structure. Don't look at candles. If you look at candles and say that is a downtrend, and price is going to go down to what, 1790, 1780, right? Your H1 must show that it's a downtrend as well. Okay, we have the down move. In this case, right, price have, in this case is only uptrend. Okay, uptrend, price goes down. But is it a downtrend? No, there's no lower low. Price does not break, so there is no confirmation that it will go down, except for this candle. In the lower time frame, this is a downtrend, of course. In the M15, right, this is a downtrend. Lower high, lower low. M15 confirm chop guarantee. Let me see. Yeah, downtrend. Lower high, lower low, lower high, lower low. It's a downtrend. But in the high time frame, it's not a downtrend. Based on one candle, this is a bearish candle. How do we know it's a bearish candle? Combine all together and you will know it's a bearish candle. Okay? I mean, in this case, sellers is pushing the price down. Okay, from here you will know what kind of entries to make. Okay, but for now it's still conflicting, so we have to wait and see what happens for gold. The rest, let me see for pound yen. Daily close. Okay, see, for instance right now, right, daily close, look at this. This market goes down, it's a effect. What is the cause of the effect? This base. Okay, drop, base, drop. Okay, now the effect already happened. Okay, so let's say assuming if I want the same, if I want to look for a sell, the buyers must be weak, the sellers must be strong. The daily looks that the sellers looks to be closing strong. Let's see my buyers right now. Let's see in the 4 hour. In the 4 hour, in the lower time frame, right, the buyers are, in this case, right, trending move. So any up move is a counter trend. Price continue trending move. So now the problem is, are we going to see a counter trend move towards the upside? Okay, if this wants to goes up, that's why your stop loss, right, if you want to take a sell, right, this will be a good supply zone for you to sell, and then your stop loss will be above this zone, because your stop loss must be an area where your trade calls of sell does not make sense. Okay, in this case, price goes down here after that supply, and then the next candle price pushes up here and then hits your stop loss. This is where your trade call does not make sense already. That's why your stop loss have to be here. It can't be here, here, or here. Okay, that's what stop loss for. Stop loss is not just to protect your account, but it's where your trade ideas does not make sense. Alright, so hope you guys can learn a thing or two about this. The next thing that I will going to share with you is about break-based return entry. Okay, break-based return entry is that price will always come back to the base before it make another big move, because the base is where the big boys are, is where the institution are to make their move. Okay, like for instance right now, this is the base, So price should come back to the base to go push down, just like this. Just like this. Okay, in this case, rally, base, drop, right? So this is the base. This is the base. If price came back to the base, we want to look for a sell. Price came back to the base, and then price goes down. Okay, that's the break, base, return, entry. The base break here, and then return, entry. That's how the break, base, return, entry. I'm going to share you maybe next week. Okay, so that's it for me. So I hope you guys are finding it beneficial for whatever that I've shared here, and cheers.